Hello, I am Robert and welcome to my channel, where I talk about everything automated algorithmic trading, or simply algo trading. Today we're going to continue diving into the profits of the various research I've been doing and talking about some nuances in trading that you really need to think about no matter what style, method, or technique you use in your trading, because it really does have an impact in ways that aren't always as obvious as you would expect. So for the purposes of this discussion, we're going to discuss Euro USD's market. Now, all of these are demo accounts except Cherry Blossom. Cherry Blossom is a live real money account. So here we are looking at the total number of trades since this process has been started. The second column is the number of stop losses currently taken. The third column is the total profits acquired since the trading started. And the final column, this is the average profit per trade. Now, in looking at this, there's a lot of interesting things that really stand out. But before we get into the details, you can find the charts, the statistics, and the configurations of each of these accounts in the results areas of the Jackrabbit support server, and I will leave a link in the description below. Let's start first with French Vanilla. This particular account pair has 10 levels. That's it, 10 levels. It's done 233 total trades. It's taken 12 stop losses, and it currently has a net profit of $15. And it averages about 6 cents per trade. Now let's look at Strawberry Delight and Lemon Meringue. These two accounts are interesting in that they have 73 levels. And you see here 6 cents per profit, and Strawberry Delight is 12 cents per profit. Where they differ is Lemon Meringue takes a profit of 4/3 from the deviation. So if the deviation is 9 pips, the profit will be 12 pips. Strawberry Delight takes a profit of a 3-to-1. So if the profit is if the deviation is 3 pips, the profit is going to be 9 pips. So you can see just how different the actual profit earned per count and per pair versus the average per an individual trade. Strawberry Delight has an average of literally double that of Lemon Meringue, even though the levels are the same. 73 levels for this grid. Now in this particular case, for both of these accounts, the deviation is 2 pips, or whatever the current spread is. French Vanilla is also using whatever the current spread is. So it's interesting how you have very little changes between each of these accounts, and yet the profits are hugely dramatic. You see the impact very much on how each of these functions work out. Now, Blueberry Cobbler and Cherry Blossom, they both have 43. Blueberry Cobbler has been running longer than Cherry Blossom, which is why the profits are different, and also why the averages are different. But the fact that this is made 61 cents average per trade, is really quite outstanding, and yet it's only taken 50 trades. So as you look at the levels between the number of trades versus the actual profit average, you can clearly see an interesting level between defensiveness and aggressiveness. The more defensive you are, the higher average profit per trade you will likely see. Whereas the more aggressive you are, the lower your average profit per trade is likely to be. However, in looking at the winners, trying to find the sweet spot is going to be the hard part, because the lowest average profit per trade has made $71. There's not much difference between Strawberry Delight and Lemon Meringue. In fact, the only thing that is different is the take profit. So you could actually take a very tiny change in your approach and significantly increase your average profit per trade. But you'll also lower your total number of trades in general. So we can see here between the differences of defensive versus aggressive and trying to find your place on that balancing pole to be able to decide if you go too defensive, you're not going to make as much money, but you'll make more consistent money as the trades continue. If you go too aggressive, you might make as much money or more significantly as long as the market is in your direction. But as soon as the market turns against your direction and you start taking stop losses, the impact in general could have a huge effect on your total profits. So finding out where you want to be between aggressive and defensive, that is the holy grail of trading, in all honesty. And that really depends upon your risk assessment and your budget. Each of these pairs, when they first started trading, they started at roughly $700 allocations per pair. Again, in my analysis, I wanted an apples to apples comparison. I wanted to see and keep what would happen as much as I could so I could compare it and use it for my real money account. So somewhere in all of this, you can see by the number of trades, I'm not hyper defensive, but I'm not hyper aggressive. So I'm somewhere in the middle of defensive and aggressive, but leaning more defensive than aggressive at the moment. So as time progresses and continues, and I stay at this course, the longer term basis is going to be a reliable consistency within my profitability. And that is really the whole point of what these experiments are meant to do. Not just show me the eye-catching candy that could go bad very quickly with stop losses, but to show me that being too slow is not going to be good either, even though 61 cents per trade is quite nice, but it's not going to make any real money. And right now, well, $14 isn't going to get me very far, but it's a progress step that's protecting my assets. Now, as I continue to build and as the market continues to move, I will take stop losses. And those stop losses are going to have an eventual impact on my total profitability. So study and look at the charts in the support area. The results area are very important. You see the equity chart, you see where the stop losses are, you see exactly when, where, and why things happen. That's important for understanding the market. Most importantly, it's critical for you protecting your trading. Now, again, this information can be applied to any technique. It can be applied to any strategy. It can be applied to algorithmic or manual trading. Use your demo accounts. Take the time to do the research. Let me know if you have any questions. Leave a comment below. Please hit the thumbs up, like this video. Help me share proper trading, and maybe we can make a dent in all the garbage on YouTube with people flashing money that just doesn't work, with fly-by-night get-rich-quick nonsense. I hope you enjoyed the video, and thank you for watching.